Welcome back to Friday Flows. This is Jacob Milliken, Starbucks gopher at 9M Investments. And this past week, investors were done with equities. As you can see in the ETF market, almost $3 billion left the ETF universe overall. Within the universe, they were moving from equities to fixed income. Where were they going with those dollars? Primarily government fixed income broad, some global equities in here, but global fixed income cash, fixed income municipal, fixed income high yield. People were done with equities and they're moving into the fixed income realm. Where were they going? Primarily, they were going into bonds and short-term treasury bonds. SHV took in almost $3 billion. Bill took in 1.9 billion. Vanguard's total bond fund took in 1.1 billion. All three of those are big moves over a 1 week period for them. iShares Ag Index took in almost took over 800 million. JEPI, another good week for it, took in over 900 million within that one. Where were they coming from? Again, from equities. Spider, even though that's a super large number, biggest ETF in the universe. Not really a huge move from that one. I've seen actually bigger on a weekly basis. From a return standpoint, what was doing well last week? Our old friend B Dry here had a good week, which means probably next week it's going to be on the bottom of this one. So I can't wait to see where that one is for next week. What was doing well overall? A lot of China names within the ETF universe did really well. And it makes sense. People kind of chasing returns of as China opens back up, opportunity for some of these areas to really bounce, if you will. Other areas, natural gas, still funds did pretty well last week. Kind of give you a deeper dive though on one of the funds that we talked about earlier is JEPI. That is one of the funds that I use in my portfolios. Now I use it on the equity side, but I've read about more and more advisors using it as a fixed income replacement because of this high dividend. So if you compare it to the ag ETF, from a dividend standpoint, again, almost 12% to 2.5%. So, obviously a yield there that is very attractive and can help fill those needs from a fixed income side of the play. But this is an equity-based ETF, so it's going to be moving more like equities and less like bonds. So kind of want to give you an idea of what does that movement look like versus kind of the ag index. So these numbers here, the 5-day volatility, 20-day, 40-day, and 60-day, as you can see, like it should, the ag has a little bit lower volatility. In the 5-day, any shorter term period, you would expect the JEPI to have more volatility than the bond market. But it's a lot closer the further you go out from a volatility standpoint. So 20-day, much closer. Volatility at the 40-day, again, fairly close. And even 60-day kind of gives you an idea of, okay, if in a portfolio I want to bring low volatility and a high dividend yield, is that actually a good replacement for that fixed income? And so for me, that volatility is probably a little bit high to replace a piece of the fixed income pie, but you can see it's much closer than you think. And if you're willing or able to take on that extra volatility to get a much higher yield, then that might make sense. From a return standpoint, now JEPI hasn't been around too long, but from a return standpoint, over the last 2 years, 8% versus -6. Over the last year, right at zero pretty much, and the ag index was down almost 10%. So from a price stability standpoint, which is really what you want from your bond side of your portfolio, this is held up pretty well compared to equities, compared to the ag. So, that might actually be a good replacement for a portion of your fixed income. Now, again, everybody's scenario is a little bit different, and how you're building out your portfolio construction does matter. So, but those are some of the things that looking at that I could see where advisors are looking at that and say, that volatility is close enough. It's giving me the price stability that I want from that piece of the portfolio. And then this is the thing here where it is just hard to beat across the board, from an equity side, and obviously even from a fixed income side. And even if you're looking at high yield portion of fixed income, it's very hard to find anything that looks like this from a yield standpoint. So completely makes sense to me why some advisors might be looking at it from that standpoint. Um, me personally, and what I'm doing with my clients with this fund is part of our equity side of the equation, but I can see why advisors are looking at it from a fixed income side as well. So anyway, I hope that was helpful. I hope it gives you a little bit of information. If you have any questions for me, please reach out, and we'll be talking soon. You have a great day.